Hello, everyone. It is Tamar Hermes here live, Wealth Warrior Woman, and I decided that I was going to come on today and be your guest. I have been have interviews lined up for the following weeks at 10 a.m. Central Standard Time, and if you're part of the groups, then you can sign up. I'm going to leave the link below. It's finally working, and you can sign up to be a part of the interviews, and they can either be you asking for coaching advice on where you're at with your financial real estate investing picture, or it can also be you as an expert sharing what you've done, sharing your journey and helping others along. And that's part of what we do here in these groups, is support one another. So I hope that many will watch this and join me to learn more about real estate investing. I'm going to be sharing a little bit on how to figure out your cash flow numbers today. And I wanted to come on and share this is because I think that when you're starting in real estate investing, or even when you have just 1 to 2 properties, it is often confusing as to where you want to start and what do you do first. And it can feel very overwhelming. And this is something I go through a lot in my mastermind and in my course, but I also want to give you the value too. If you can't do those 2 options, don't work for you. So when we talk about a cash flow number, the cash flow is actually the number that after all the expenses and the mortgage, you actually have that amount of money left over every month to either reinvest or to live on. I mean, you can build your cash flow to hundreds of thousands, millions a month if you so desire. Now, the one thing I want to say about real estate investing is that generally you're not going to be making the $1 million overnight. And a lot of people think that when they get into real estate, they think it's a get rich quick. And with real estate investing, it's not get rich quick. So what we're going to look at is the cash flow number. That number because that's a lot of reason why people want to get into real estate investing to begin with, because they don't want to work at the job that they're working at anymore, or they want more freedom. They want to be able to do what they want to do. So they want to reach a number that will come in every month of income where it's generated through their properties. So how do you do that? So one of the ways that a lot of people will go about that is what they'll do is they will figure out, let's say you're making $10,000 a month and you want to replace that number. So you're starting, so let's say for the sake of starting out in your mind, you want to start real estate investing, or maybe you have 1 to 2 properties and you're thinking, how can I get to $10,000 a month? Okay, so now you have a number. Now you have a number in mind, and that makes it a lot easier, right? It's a lot easier to get somewhere if we have an end in mind, right? Because without it, it's just we're just kind of throwing darts. So let's say it is 10,000, and that's a number a lot of people like, because a lot of people can live on 10,000 a month, and they would have a great life, and they would be very happy to just be able to have 10,000 coming in every month. So what do? So you start thinking, okay, I want to make 10,000 a month. So then you have to look at how much money you have or what money you might have access to. Now that's something that can expand as you find deals, because as you find deals, what will happen is you may be able to find partners and get other people that to invest with you, because you have the deal and you can bring it to them. So you want to start out thinking, okay, do I want to do a multifamily? Do I want to do a single family? How many units do I want to get to this number? And the other thing you have to think about, and this is something that I go a lot into deeper detail when in my mastermind, but what you need to figure out is where you want to invest. A lot of people, when they start out, they want to invest close to where they are. Now, if you live in a place like Austin, you may need to go to the suburbs. You may need to go to San Antonio, Waco. There's a lot of other places. There's a lot of other suburbs that we're investing in now, because what happens is that if you try to invest in right in the city center of Austin, you will not be able to cash flow. And if cash flowing is your goal, then Austin is probably not the best market for you. So you may need to go outside of that, right? So a couple of the properties I bought recently have been in San Antonio area because I'm able to cash flow those. Okay, so once you figure that out, you need to figure how much you would want to make every month from each property to figure out how many properties you need. Let's, for the sake of conversation, let's figure that you want to do you're going to do single families, which is the easiest thing, and it's also very stable. Single families are great. They're easy to get rid of. They're easy to manage. There's a lot of great positive features with single families. So that's where a lot of people start, especially if you're in these areas in Texas. Some of the multifamilies are very high priced, so it's more complicated. It's not to say you don't start there. You may want to, and you may have the money and the connections to do that, but it's just single families, just very, very easy way to go. And so a lot of times, like if you're listening to Bigger Pockets or you know about me through Bigger Pockets, they often will talk about, Brandon Turner will often say, if you can cash flow $100 to $300 a month on a property, then that's great. I say not so great, because to me, if I'm making $100 a month cash flow, I almost don't even want to bother doing it unless I'm doing it for an appreciation play, which means that I think the property is going to go up in value. Maybe I'm buying in Austin and I'm not cash flowing as much, but the properties are appreciating. So that might be one thing. But for the sake of this, we're looking at replacing $10,000. So here you see already, like that won't fit into your strategy. So you're not going to do that. That doesn't work because you're not looking at only appreciation. Now I look at both an appreciation and a cash flow. So I like to have something that I think, a property that I think will also go up in value and also give me cash flow. And I say, when I said 100, 300, not so good, because I like at least 500. I don't even want to do it unless I'm going to make at least 500 a month. It's a lot of work to get a property and get it all set up. And if you want cash flow, and that's one of your objectives, you want to make sure that there's a pad in there. Now, what do we have going in our favor? One is that interest rates are super low right now still. I mean, they've gone up a bit for investors, but they're still great. So that means that if you you don't need as much of a spread on a property, right? Because you don't have to pay as much for the mortgage because the interest rate is low. So that's a really good thing. So let's say we average 500 and 500 per properties, and you need 10,000 a month. So that would mean 20 properties. Now that it depends, you know, there's a big range in there in terms of how much you'll pay for each property, but you could easily do this. It's not that hard, and it wouldn't cost that much. I mean, if you bought properties, like been buying properties for in the $200,000 range, and I'll be making at least 500 a month on each of them, and cash flow, and I will also be appreciating. So I'm doing both. Okay, I'm getting both out of it. So that's like a bonus. Plus you get all the tax deductions and whatever else that you can write off depending on where your finances are. The taxes can be really beneficial. So how many? Okay, so then I just said 20. Now at first you could be thinking 20, that's totally doable. Like I could just do 5 a year. It's not that hard. I mean, you can do 5 a year easily. And you can make 500 or more easily. So you can already start to see how this can start to move very quickly. Okay, and the thing is that when you're looking at these properties, you already are so much more focused if you listen to this, right? Because we already talked about, okay, we want cash flow. We're not solely looking at appreciation. And if we want cash flow and we want a minimum of 500, there's your criteria. If it doesn't fit, it doesn't fit. So you don't even have to like do anything more. Like if it's just going to give you no cash flow or $100, then throw that deal out and move on to the next. Okay. And then what you want to do is, if you know that you need 20, you want to figure, okay, if I want 20, then how many years do I want to do this in? And that, of course, will depend on how much income you have, how much you're willing to save, how many viable partners you can find, because sometimes you can borrow money and find partners from people. You can borrow a substantial amount right now from the bank if you have good credit, and you also have a W-2 is really helpful. But even if you don't have a W-2, you can do these deals. So, so the third thing you want to really look at is by when. By when do I want to do this? Now, I have clients that are very aggressive. They think, I want to replace $10,000 in a year. So they would have to buy 20 properties in a year, or they need to find something that is going to give them even more than the $500 a month. Now, if you really want more than the $500 a month, there's a couple ways to do it. One is you can put more cash down, which means you'll get more cash flow. But then if you put all your cash down, then you have no cash to buy other properties. So that's not a great idea, because it gives you the cash flow, but it doesn't give you the leverage. The leverage is the part where you can borrow from the bank and you can buy 5 properties for the price of putting all your cash into one property. So that's the first thing. The second option that you have is to, what you can do is you can, I lost my train of thought. I don't know, just do something. Just kidding. Okay, so yeah, so you can either put all your cash down, or the second thing you can do is you can do Airbnbs. That's what it's gonna say. So if you do Airbnbs, you can make a lot more money. You can rent by the room, you can house hack, which means that you're gonna live there and have roommates there, or you can just set it up as an Airbnb or a furnished rental. Those make a lot more money. Now, if you're going to do those, you need to do your research. There's a lot more research involved, because it's not as simple as a single family home. Because one, you have to invest in the furniture to make, to have it all furnished and ready for renters. You have to run the numbers to make sure that once you furnish it, fix it up to a certain point where you can get people to want to rent it for a short period at a premium price, that it's in a good location, and that there's a demand there for it, and also that the regulations are there for it. So you need to make sure the regulations allow for that. And there are ways around the regulations in certain areas that no longer allow it. Like with Austin, it's very strict here, but there are ways around it, although it's very strict, and you need to be very careful if you want to play that game. Because if you go around it and you go through maybe some loopholes or maybe some things where you kind of can go undetected, if you do get detected, they may say you have to shut it down, in which case you need to be prepared financially to be able to manage it and have a plan B. So I have one that I'm doing right now, and should I not be able to do a short term or do 30 days. A lot of times you could do over 30 days. Then I may need to do a long-term rental, and I can do that with the strategy and the numbers that I've worked. So you want to make sure you work your numbers. So in review, this is a lot of information. I think it's pretty clear in terms of what your next steps can be if you just follow this. So the first thing is you figure your cash flow number. Now, I say even if you want a $5,000 cash flow, to make it 10, because you're going to be thinking a lot bigger if you're making it bigger than what you really want. So if it's 10, make it 20. If it's 5, make it 10. That's a little mindset trick that really works well. And what you want to do is you want to come up with that number. So let's say it's 10, maybe I'm thinking 20, maybe I do want to stick with 10. That's more comfortable for me. And then I need to look at how many properties based on what's around me, or, if I'm willing to go out of state, who do I know out of state, or where can I find people, or what markets interest me. There's a lot of good markets in every state. So, probably the hardest ones are LA, California, altogether California. It appreciates a lot, but not good cash flow and very expensive, and a lot of regulations. And New York in the city center is a lot regulated. You also need to be careful if you're going to buy a condo or something like that. You want to be careful with the HOAs and make sure that they'll let you do those short-term rentals. Those can be very strict and can put you out of business pretty quickly. So we're going to figure out what our cash flow number is. Figure that out is step one. Step two is, okay, if that's my cash flow number and I can make at least $500 on a property, or if you're doing units, you can figure, okay, how many units do I need? You know, if you're going to buy a multifamily, like maybe a fourplex, you could easily get $500 from each fourplex too. You won't be able to do that in Austin, but you could do it somewhere in a suburb in Texas, or you could do it in another state for sure. Okay, so that's the second thing. And you want to set a goal in mind. You want to have that number in mind because, I mean, honestly, you figure, I mean, I'm estimating $500 per unit. But if you're going to estimate $100 a unit, you need a heck of a lot of properties. And that's going to take you a while. And it's just very slow moving. And each property, you know, it takes some time, and there's a lot of variables that need to go into creating the deal, working the deal, getting the deal, closing the deal, managing the deal, all of that. So you really want to make it worth your while. So I'd like you to be able to get at least 500, because at least that makes it worthwhile. Because $500, it's like, you know, you can start to work with that number. Okay, so you need to figure out, based on that number that you want, how many properties you need, and then give yourself a buy one. And I always say, you know, be kind to yourself in terms of your buy when. Like, don't, 20 property, you could say 20 properties in a year. You could totally do it. It's possible. It's more than possible. People do it all the time. You just have to really set your sights on it, be aggressive. I would not go on a lot of fancy vacations unless you have a lot of expendable income, because you want to put all of that into your properties. And you want to really be, working your deals in order to build momentum. Because what happens is, once you start finding people who can help you get deals, like a realtor or a really good wholesaler, then you're going to be off to the races. You're going to be able to move much more quickly, and deals will start coming in. So once you know your criteria and you have your idea in mind, then you'll be able to move a lot more quickly. So I have, in addition to my active investing, I do a lot of passive investing. So I do a lot of things where people bring me deals. I look at those deals, and if I like them, and if I like the sponsors and how everything's set up, I'll invest in that deal passively, and I don't have to do anything, and I can make 10 to 20%. So I can make that money I can make that cash flow by doing nothing too. And that's something you can do too. That's another option if you don't want to do this all on your own. So there are a lot of ideas here. And I didn't, the way that I'm on StreamYard today, I'm not seeing questions. So if I see questions in any of the Facebook groups, because I'm streaming on a couple of them, I will answer them. I'm also going to be in the Facebook groups. Which is the Wealth Warrior Women Accountability Tribe, or the Austin Women in Real Estate. You can, I'm going to be putting in a link in there, so you can schedule at this time. You can either be live with me and ask questions, or you can share your experience that helps others. All of it helps us, right? We're all helping one another. And no matter where you're at on your journey, you have a lot of valuable information to offer, and we all do. So, so thanks for watching this. Thanks for tuning in, and I appreciate you. And I wish you a wonderful rest of your week. Get started. Post your questions if you need to, if you have questions about all this. And I'm excited for what you create. So have a great day. Bye.
Thank you for watching. I hope you enjoyed this video. Like and subscribe below, and you can find out more at wealthwarriorwoman.com.